For 5 centuries, the rise and fall of global powers have followed a familiar rhythm. Spain, Britain, the Soviet Union. Each reached unmatched heights. Each believed its strength would last, and each collapsed after passing through the same unseen pattern. Today, the United States is moving along that same path, not at the beginning, not at the end, but somewhere in the middle. The warning signs are no longer subtle. Debt rising faster than growth. A military stretched across the world. A society more divided than it has been in generations. A currency facing pressures that did not exist 20 years ago. This story is not a prediction. It is a comparison. A look at how empires fail when they mistake size for stability and privilege for permanence. So the question is no longer whether the pattern is real. It is whether the United States can step off the path that has pulled every major power toward decline. And if it cannot, how much time remains before the next stage begins? Across empires, decline does not begin with collapse. It begins with momentum. Success encourages expansion. Expansion encourages risk. And risk, when repeated for long enough, creates the same 7-stage sequence that Spain, Britain, and the Soviet Union each followed. The first stage is military overextension. An empire rises with a focused defense strategy, but as its influence expands, so do its commitments. It builds bases, fights distant wars, and takes on obligations that slowly drain its resources. The second stage is currency distortion. When military and political costs grow faster than tax revenue, rulers search for shortcuts. Spain mixed copper into its silver coins. Britain defended an overvalued pound. Modern powers print money to cover structural weakness. Each method weakens the credibility of the currency. The third stage is the debt spiral. Borrowing becomes normal, then necessary, then permanent. Interest payments grow faster than the economy. Eventually, debt is taken on not for investment but simply to maintain the system. The fourth stage is the erosion of productive capacity. Nations that once built and exported begin to import. Factories close. Skills decline. Finance grows faster than industry. The economic engine that supported the empire begins to weaken. The fifth stage is social fragmentation. Inequality widens. Institutions lose trust. Younger generations question the future. Politics becomes more emotional than strategic. The sixth stage is the loss of reserve currency status. The world slowly diversifies. Allies hedge. Rivals build alternate systems. A currency that once ruled begins to slip. The seventh stage is collapse or reset. Sometimes fast, sometimes slow, but always the result of passing through the earlier stages without reform. This pattern is not theory. It is the structure that shaped the 3 great declines of the last 500 years. And now it is the framework through which we must examine the United States. Spain in the 16th century was the first true global superpower. Its strength rested on a single source of wealth: the silver that poured out of the Americas. From the mines of Potosi in Mexico, hundreds of tons of silver crossed the Atlantic each year. By 1550, Spain controlled the monetary lifeblood of Europe. By 1600, annual silver imports had doubled. But easy money hides structural weakness. Spain used its silver to finance wars across 4 continents. It fought the Ottoman Empire and the Mediterranean rebel forces in the Netherlands, rival navies from England, and campaigns across the Americas and Asia. The empire grew larger than its tax base could support. This was military overextension, the beginning of the pattern. As costs rose, Spain debased its currency. Silver coins were mixed with copper. Merchants noticed and demanded higher prices. Inflation spread through the economy. When debasement was not enough, the crown borrowed. It borrowed from German bankers, Italian lenders, and anyone willing to finance its wars. The result was 4 bankruptcies in 40 years. The deeper issue was that Spain stopped producing. With silver flooding in it, was easier to import goods than to make them. Domestic industry weakened. Agriculture stagnated. Skilled labor left for France and the Low Countries. Spain became a conduit for wealth rather than a creator of it. When silver production finally declined, the illusion collapsed. Portugal broke away. The Dutch rebelled successfully. By the early 1700s, Spain was no longer a leading power, but a shell of its former empire. Spain's rise and fall showed the world how easy wealth can hollow out a nation from within. It was the first full example of the 7-stage pattern, and it would not be the last. By the early 20th century, Britain commanded the largest empire in human history. A quarter of the world's landmass was governed from London. Its currency, the pound sterling, anchored global trade. Its navy controlled the seas. On the surface, Britain appeared stronger than Spain had ever been, but the same pattern was already in motion. World War I marked the first turning point. The war cost Britain more than it could afford. To continue fighting, it borrowed heavily from the United States. By the end of the conflict, the empire had won on the battlefield but lost financial independence. The creditor had become the debtor. After the war, Britain attempted to rebuild its old economic order. In 1925, it returned to the gold standard at the pre-war exchange rate, hoping to restore the prestige of the pound. The decision backfired. The currency was overvalued. Exports fell. Factories closed. Unemployment rose. Britain was defending a price that no longer reflected its real economic strength. In 1931, the gold standard broke. The pound dropped sharply, and global financial leadership shifted toward the United States. World War II finished what the First War had begun. Britain fought bravely, but the cost was enormous. When the war ended, Britain owed more money to the United States and Canada than its entire economy produced in a year. It could no longer sustain a global empire. In 1947, Britain gave up India, its most valuable colony. Over the next 2 decades, the rest of the empire dissolved. By the 1972, Britain was no longer a territorial superpower. Yet Britain's story took a different turn from Spain. Instead of collapsing, it transformed. London reinvented itself as a global financial center. The Eurodollar system, offshore banking, and international capital markets allowed Britain to retain influence without an empire. It was a softer landing, a managed decline. A reminder that empires do not always fall suddenly. Sometimes they shrink, adapt, and survive in a new form, but the pattern remained the same: overreach currency, strained debt burdens, and the erosion of real economic strength. The next empire would not be as fortunate. When the Soviet Union emerged from World War II, it looked like a rising superpower. It controlled Eastern Europe. It had the largest army on the continent. Its ideology promised a new world order. But beneath the surface, the foundations were already unstable. And unlike Spain or Britain, the Soviet collapse would come suddenly. The first pressure point was military overextension. To match American power, the Soviet Union spent between 15% and 20% of its entire economic output on defense. It maintained huge forces across Eastern Europe. It fought a long, draining war in Afghanistan. It supported allies in Cuba, Vietnam, Angola, and the Middle East. The costs rose faster than the economy could sustain. Then came stagnation. Central planning produced quantity, not quality. Factories failed to innovate. Technology fell behind the West. Farms underperformed so badly that the Soviet Union, with vast farmland, became dependent on imported grain. When global oil prices collapsed in the 1980s, the country lost one of its last reliable sources of hard currency. At the same time, the ruble was failing. It could not be used outside the Soviet system. Even inside the country, citizens preferred dollars or goods they could actually use. A currency loses power when people stop trusting it. Once that happened, the Soviet financial system began to break. In 1989, the empire around Moscow began to unravel. Poland, Hungary, Czechoslovakia, East Germany, Romania, and Bulgaria all broke away. The Soviet Union no longer had the resources to hold its sphere of influence together. 2 years later, the collapse became total. In December 1991, the Soviet flag was lowered for the last time. 15 new nations emerged. A nuclear superpower disappeared without a foreign invasion. Its foundations had rotted long before the fall became visible. The Soviet Union showed how quickly an empire can vanish when its economy stops producing, its currency loses trust, and its political structure cannot adapt. It was the fastest end to a great power in modern history. And now the question becomes clear. Where does the United States stand in this cycle, and how much of this pattern applies to the world's current superpower? The United States became the world's dominant power after World War II. It rebuilt Europe, shaped global institutions, and backed the international financial system with the strength of the dollar. For decades, the American model combined military reach, economic dynamism, and monetary influence in a way no empire had achieved before. But today, many of the warning signs seen in earlier empires are emerging inside the United States. Not identical, but recognizable. The first sign is military overextension. The United States maintains more than 700 overseas bases and a security presence in about 80 countries. It guarantees the defense of Europe through NATO. It protects trade routes across the Middle East. It supports allies in Asia against rising Chinese power. Each commitment is logical on its own, but together they form a global burden no other nation carries. The second sign is currency strain. Since the dollar left the gold standard in 1971, its supply has expanded far faster than economic output. From 2000 to 2025, the money supply grew by hundreds of percent. Emergency programs after the financial crisis and the pandemic added trillions more. The dollar remains dominant, but its foundation relies increasingly on confidence, not convertibility. The third sign is the debt spiral. Federal debt now exceeds $38 trillion. Interest payments alone approach $1.1 trillion per year. The country borrows even during times of growth. Debt has shifted from a tool for investment to a tool for survival. No empire in history has remained stable once debt grows faster than the economy. The fourth sign is declining productive capacity. For decades, manufacturing moved offshore. Supply chains depend heavily on foreign producers for electronics, medicine, minerals, and even components used in weapons systems. Innovation remains strong, but production has weakened. An empire cannot project power indefinitely if it relies on others to supply its essentials. The fifth sign is social fragmentation. Political trust is low. Economic inequality is high. Cities struggle with crime, homelessness, and addiction. Cultural conflict overshadows national unity. Most empires reach this stage when internal cohesion begins to erode. The sixth sign is early pressure on reserve currency status. The dollar is still the world's backbone, but trends are shifting at the margins. Some nations are diversifying their reserves. Major oil exporters experiment with non-dollar settlements. Central banks are buying gold at record levels. These are small changes, but they signal a world preparing for a future less dependent on the dollar. The United States has not reached the final stage. Its strengths remain extraordinary. It leads in technology, finance, energy, and innovation. Its universities and markets attract global talent. Its military remains unmatched. But the direction of movement matters. And the movement today resembles the middle of the historical pattern. Whether the United States continues along this path depends not on destiny, but on choices. And those choices will shape which future becomes real. History shows that empires do not fall in the same way. Spain collapsed slowly. Britain declined gradually and reinvented itself. The Soviet Union fell almost overnight. These three endings provide a framework for understanding the possible futures of the United States. The first path resembles Britain. After losing its empire, Britain remained influential by transforming into a financial hub. It maintained stability by reducing military obligations and relying on the strength of its markets. If the United States chooses a similar course, it could scale back global commitments, stabilize its fiscal position, and lean on its dominance in finance and technology. This future would mean less global control but continued relevance. The second path mirrors Spain. Spain's decline came from over-reliance on easy wealth. It lived off silver instead of productivity and became dependent on imports. Over time, its economic foundations hollowed out. The United States faces a modern version of this risk. Dollar privilege makes borrowing easy. Consumption rises faster than production. If this continues, the United States could enter a long, slow period of stagnation, where debt accumulates, industry weakens, and living standards erode. The decline would be steady rather than sudden. The third path follows the Soviet example. When economic stagnation, political division, and currency problems converged, the Soviet Union collapsed quickly. While the United States is far more flexible and innovative, it is not immune to structural shocks. A rapid crisis could emerge if debt grows unmanageable, trust in institutions falls further, or the dollar faces a sudden challenge. This scenario is the least likely, but the most disruptive. These three paths are not predictions. They are possibilities shaped by choices. The United States still has the resources to change direction. But the longer it waits, the fewer options remain. When we place Spain, Britain, and the Soviet Union side by side, a deeper insight becomes clear. Empires do not fall because they are weak. They fall because they grow in ways that hide their weaknesses until it is too late. Their collapses follow emotional and structural mistakes that repeat across centuries. The first lesson is that easy wealth creates complacency. Spain drowned in silver. It stopped building, innovating, and producing because money arrived too easily. When the flow slowed, the empire had nothing to fall back on. The second lesson is that military reach grows faster than economic strength. Britain learned this the hard way. Its global commitments expanded long after its industrial power began to fade. Wars accelerated a decline that had already begun. The third lesson is that real power depends on productivity, not symbols. The Soviet Union built tanks, missiles, and monumental structures, but its factories could not compete. Its currency lacked trust. Its economy could not support its ambitions. The fourth lesson is that trust is the true reserve currency of any empire. Britain kept influence because the world trusted its institutions, even after the empire fell. The Soviet Union collapsed when its own citizens lost faith in the system. The fifth lesson is that denial accelerates decline. All three empires dismissed early warnings. They convinced themselves that their size made them immune to the forces shaping their downfall. The final lesson is that foundations matter more than appearance. A nation can look strong while standing on eroding ground. Real strength comes from productivity, fiscal discipline, social cohesion, and credible institutions. These lessons are not warnings about the past. They are signals for the present. They show the forces the United States must confront if it hopes to avoid the final stage of the cycle. Every empire reaches a moment when the story stops being about the past and becomes a question about the future. Spain believed its silver would last forever. Britain believed its empire could survive any strain. The Soviet Union believed its political system could resist any pressure. All three discovered that history does not reward belief. It rewards discipline, adaptation, and renewal. The United States stands in a similar moment now. It is not doomed. It still leads the world in innovation, finance, culture, and military capability. No nation has more tools to change direction. But strength becomes fragile when warning signs are ignored. Debt rising faster than growth, military commitments expanding, industry weakening, social trust eroding. These trends match the middle of the historical pattern. The final stage is not inevitable. Decline is not destiny. The cycle only becomes irreversible when a nation refuses to confront the forces shaping it. Spain ignored the truth until its economy broke. Britain adapted just enough to land softly. The Soviet Union denied reality until collapse arrived in a single night. The United States still has a choice. It can reform. It can rebuild. It can renew the foundations that made it powerful. Or it can continue down a path that history has traced many times before. The pattern is clear. The stakes are real. And the next chapter will be written not by history, but by the decisions America makes now.